Hello and welcome to another episode of Fintech Focus TV with me, Toby Babb. Today, I'm absolutely delighted to bring to you Liam Huxley, who is the CEO of Cassini Systems. Liam, how are you?
Very well. Good to be here, Toby.
Great to have you on board and listen. Good to see someone back in the city as well. I was in there yesterday, just up the road from you. I know our offices are a stone's throw apart, and it looks like the weather's come out for you to celebrate the re-entry to the city again. How are things up there today?
It's a beautiful day. In our office here, we actually overlook Tower Bridge, so it's a gorgeous time to be in the city, and it kind of feels like an escape, really. First time out of solitary confinement from home. Yeah.
We'll be back. We'll be back soon. Looking forward to it, and glad to see you. Glad to see you back in there and venturing back into town. Listen, Cassini is a company I've known about for a while now. Everything I'm hearing and seeing has been about growth and expansion and good news stories coming out of it. So I'm really looking forward to getting into this. Congratulations to you and the team. You have been included on the Financial Technologist's most influential fintechs of 2021. So more of the bandwagon of good news rolling around the Cassini streets at the moment. But before we get into all of that and talk a little bit about what's happened over last year and how you sort of went through that and what's coming up in both your space and in the company and the sector and Buyside technology over the course of next year, let's find out a little bit more about the origins of Cassini and your background in the company. Can I ask you to introduce yourself and the business, please?
Yeah, absolutely. So my background was originally as a technologist. So I started off in comp sci and tech world, working in banks, prime brokers. So one of those great serendipitous things in life where you just sort of land in a job without any kind of plan or foresight, and that kind of sort of sets the path for the rest of your career, effectively.
I know that one.
Yeah, it's nice when it works out. You navigate the twists and turns that come to you. But yeah, so I started working prime brokers, worked in that role for I guess 10 or a dozen years in two main banks, running tech teams in London and New York. Building margin systems, building swap trading platforms, revenue systems, all the kind of different components, and really having exposure to the financial market and the very broad asset class which you get through that world. And then I left in 2005. I co-founded a previous business to Cassini that was focused on the PB and the hedge fund world. That was Corson Covert, and we sold basically initially margining platforms into prime brokers, and then ironically, another sort of major financial event, the crash back in 2007-8, caused a change of recognition in the market and an appetite for hedge funds for tools and for margin replication. So we then also sold into that world and sold that business into Advent Software as it was, which is now part of SS&C, back in 2011. So that was sort of the grounding in financial markets and in this kind of part of the industry. I spent a couple of years with Advent after the acquisition, transitioning that business in New York, and then left and was looking at different ideas for a new product set, essentially in the market. And the genesis of Cassini sort of came from that exploration and validation of what was needed in the world at that time. So in 2014, really looking at what was going to be coming down the road, and that would affect the broader derivatives market and the broader buy-side market. And what I could see was that there was sort of different waves of regulation coming down. You had clearing mandates, Dodd-Frank and EMIR, and all the global regulations around that. And then MiFID II, which is a sort of correlated or incidental set of regulations, but changed the definitions of what true trading cost was, what the all-in cost of a trade. And then you had uncleared margin rules, the UMR, also in train, and you can see that coming down the track. And looking at that confluence of regulation really sort of gelled the realization that the traditional buy-side market, rather than say the hedge fund world, which was going to have a change in its outlook and a change in cost and of trading derivatives, and also impact on collateral and liquidity. So that was sort of the genesis of then figuring out how to solve that problem and how to create a platform that would be applicable across that broad market.
And looking at that as a specific problem, I guess was a deliberate aspect of you having, had the advantage to exit, having looked at the marketplace and said, right, I want to go again. Tell me about some of the sort of decision making that allowed you to say this is the right problem for us to be solving at the moment, because it certainly seems to have proven that, doesn't it?
Yeah, well, I think the key thing, certainly from my perspective anyway, is I've never been that keen on just reinventing a mousetrap. Never been that keen on sort of doing something that's already done. And in my prior career in banks, pretty much all the sort of systems and solutions I built were new concepts. So it sort of hadn't really been done in that form in other banks at the time. That was an evolving industry as well.
Yeah.
So, and Syncova was a similar thing. Syncova was, when we started Syncova, all the people we spoke to in the PB industry said this can't be done. You can't build a platform which can be generically used to construct the very bespoke and very complex prime broker margining models. Every PB has a bespoke, very organically evolved model, and they're all completely different. So we said, yeah, we can do that. We know, technologists, we know how to solve that problem. So the same thing with Cassini. What I could see was that there was going to be an additional sort of impact of all these regulations that wasn't addressed by any of the existing kind of technology solutions. And because it was really multi-silo, multifunctional, it's a problem that needs to be understood in the front office, but is really derived from back office data, and data that is often in an outsource operation, not even in the firm. So you could see that there was a need for a new sort of thinking and a new solution set there. And that was really the sort of the key to it, because that means firstly, there's a business opportunity because it's a new concept. No one's in that space yet. And also because it goes across silos, it's something that's not going to be obviously and easily kind of competed with. None of the standard platforms are going to be easily able to pivot and adapt into that area because it goes outside of their functional boundaries. So those two seem to be keys to make it a viable idea to explore. And certainly through 2014 and 15, I did a long series of validation meetings, various participants around the market, on all parts, buy-side, sell-side, dealers, software firms, really evolving and exploring how that model would shape up. And the feedback was almost unanimous in that it's the right idea. It's early. 2014, 15 was too early for the market to really want to start adopting it, but that was fine because we needed time to build it. And that people looking down the road could see that this would have the right fit and right applicability. And I think that's how it's kind of panned out. There's a lot of market evolution that's happened in the meantime in terms of people understanding the impact of regulations and collateral issues on their trading and on their operations, and thinking differently about how to solve that. And so we've sort of come into that space at the right time with the right solution set.
I love that, and this is a sort of feature of the companies. The vast majority of the companies we're featuring in this issue of the Financial Technologist is businesses there that are looking at not only sort of problems that have got genuine impact into marketplace, but future gazing a little bit as well. And I think that's really, it's bold, as you say. That you mentioned there that it was too early for the market, but it was an advantage for you to be too early that allowed you to position yourself for that. That takes some courage in terms of setting that up and being positive in your crystal ball about what the market reacts to and where those problems are. So sort of playing two moves ahead of the industry, I think is fantastic and gives you that sort of first mover advantage to really solve those problems. And I know we've spoken about this in the past about the importance of first mover advantage and doing things well at the right, and competitors and other people come there and copy that if you're doing the right sort of things at various different stages. But when you're there and you have that sort of initial foresight to be able to do that, it creates those sort of great opportunities to scale. And I'm really interested in this because your business, as I said, has always been synonymous to me with fast growth, and it's been a continuous trajectory as far as I can see from the outside of doing the right things the right way, attracting good investment, having a good plan, good team, good growth, both in the UK and the US. You mentioned there earlier on in your first business, 2008, and how that became an advantage for you as well, with that to sort of move into different areas and expand the sort of product portfolio and customer base a little bit with the hedge funds. The businesses that I've been speaking to over the last year who've done really well are also the people who've looked at what we've seen over the last year and said, right, how can we use this to our advantage rather than sort of draw up the shutters and survive? How can we attack the marketplace and add more value to our customers and deliver more issues? Now, we haven't spoken about this so far, but I imagine 2020 will have been very similar to you in 2008 as to how you can deal with it. Talk to us about how Cassini has not just weathered the storm, but come flying through it and continuing to grow and evolve and add value and provide more solutions to customers because of what we've been seeing.
Yeah, absolutely. So I think to that very point, there is a great analogy or sort of correlation for us between 2008 and last year. Obviously, the events were very different, the causes were different, but the side effect of both of them was to highlight a gap and highlight a need in the kind of control process and in the risk process of the firms that are in our target market. So first time around, it was specifically the hedge fund universe. Hedge funds with exposure to Lehman had large amounts of kind of collateral and assets tied up and didn't understand what was happening with their counterparties margining, et cetera, et cetera. And last year it was more, obviously COVID had operational and personal impacts on every firm. We, like everybody else, switched immediately, mid-March or end of March, whenever that we actually flipped over from
almost a year to this week. Isn't
pretty
it?
much, yeah, amazing. Yeah. And we're still not in the office. So we switched exactly to remote working. As a software company that's based on a modern kind of software development platform and tech stack, that was actually pretty straightforward. Everything's in the cloud anyway, so that really wasn't a problem. But the bit that's interesting from the kind of business and finance perspective is that the side effect of COVID was the volatility in the market. So suddenly the world's economy is thrown into turmoil. No one quite knows how this is going to pan out, what the risk is. So that, as we all remember, right, the markets went kind of crazy. Volatility.
I think people forget that though, don't they, as well? I mean, people do forget about how sharply it declined. I mean, the headlines were extraordinary at that time, right?
Exactly. It was calamitous. And of course, the nervousness and the risk, no one really knew what the impact of this pandemic was going to be, and therefore what the kind of recovery path would look like, or how major an impact it would have in the long term. So markets declined hugely, volatility went through the roof, and that really was the key, because for the firms who we're focused on and we support, then trading any kind of collateralized product, when volatility goes through the roof, suddenly everything changes. Your margin calls double or more overnight, both on initial and obviously the variation in the mark to market. So we saw that. We saw our clients and firms who we're sort of talking to, who weren't clients yet, suddenly having these huge stresses on their kind of ability to keep their trading and support their trading, because suddenly having to find huge amounts of cash or other collateral to post out. We saw firms unwinding hundreds of millions of euros of positions, to free capital up. We had other clients who literally sort of calling us up going, right, we need to halve our margin now. Quick, tell us how to run the tools to run that, save that margin overnight. And we were able to do that. So the net effect it had was to shine a big light on the message that we've had from the start, which is that the kind of post-trade costs of trading, margin, collateral, funding, are now really material to performance of a portfolio and to the operational stability of a firm, and therefore should be part of your trade and your risk control process from start to finish. Because the fact that firms were actually having to change or get out of trading positions due to collateral volatility and collateral is kind of, it was a shock to a lot of firms. It wasn't really the way they think about it, and so that instability really sort of highlighted the use case that we've always sort of spoken about, and therefore brought more attention to what we do and to the challenges, and of course helps firms when they're starting to look at strategic solutions be able to understand the need to solve these problems, but also to sell those solutions internally. Whenever a firm is making a business process change and bringing in a new kind of set of tools, they have to obviously get buy-in from management stakeholders. So that also managed or helped firms sort of get that buy-in internally. So apart from that, on the business side, obviously COVID-wise, the other impact that we've seen, and I'm sure most firms have seen, is when you have to rebalance your firm and suddenly everyone's working remotely, you've got the kind of corporate stress and you've got personal stress. People are working from home, they have kids and the challenges of homeschooling, or they're younger people in shared houses and having to work from their bedroom. I mean, nothing was easy.
Myriad, yeah, it's a
Yeah,
myriad of different
exactly.
problems, isn't it?
Yeah, there's every person has a different sort of set of challenges. And what was amazing for Cassini was we doubled last year. We doubled in staff, we doubled in revenue and client base, even through those stresses. Now, obviously, without COVID, probably could have done more, but it's still a very strong year. And basically, the reason we managed to do that was the people. The people we managed to hire. And I'm incredibly proud of Cassini. It's the best team I've worked with and built in my career. And it's about, I have this thing about 3 T's: team, transparency, and trust. So the fact that people, we hire really smart people who are very collaborative. There's no egos. I have a no asshole hiring rule. So there's no sort of competitiveness. Everybody works together and everybody trusts each other. And there's a huge amount of transparency and openness in the firm between teams and top down. And I think that was really important to people continuing to be able to work effectively. And we look after each other and we support each other through each individual challenge, and pull the company through into a very strong position at year end.
I'm almost fascinated with that because obviously my business is all about people and teams and growing teams, and I see companies do it brilliantly and I see companies do it struggle a little bit more. I think the interesting thing is having done 21 years in recruitment now, if you'd gone back to it, gone back and asked me a year ago as to whether you were going to see hiring volumes at a reasonable level after companies have been out of an office, all your clients would not have been together in an office over the course of a year, how would you predict that would go for you? I'd have probably been tearing my hair out and seriously concerned about what we can do. But companies such as the amazing thing for me is how far from unique the sort of numbers that you've just talked about have been across the industry. But it hasn't been omnipresent. You're talking about a number of different companies who've been able to sort of really get this right, to be able to double in headcount, to be able to double in size, and to take that bold sort of approach to the industry, because they are doing things right for their customer and they're doing things right for their people within it. So when you're looking at a team there that has grown significantly already anyway, and as you say, over the course of this 12-month period, with everyone remote, has doubled in size, that creates a tremendous amount of pressure to make sure that and actual skills to make sure that no arsehole rule actually does live on. Because when you're there and you're able to meet people face to face and see how they interact with people and do all those sort of things, a lot of that sort of behavior becomes very present very quickly, and you can act on it accordingly. When it's there and it's as spread out as it's been, to me that represents a different sort of set of challenges. And so when I've spoken to companies who I think have really thrived, some of the best companies who I think have really adapted to this is the phase. Trust, transparency, and teamwork, as you said, those 3 T's are usually very, very firmly towards the top of the agenda for how they've done that, with a particular focus, I think, on that transparency, which builds the trust.
Yeah.
So it's leadership who are very transparent with their people. They trust their people to be able to get on with their jobs and deal with them accordingly. So there's very, very little micromanagement in terms of what they're talking about, which is then said, right, how do we then connect and build this team? There's as many things as we've all had the Zoom parties and all this sort of stuff, which were very on trend at the start of the pandemic and have grown ever more weary throughout all of it. But talk to me about those 3 T's in a little bit more difficult in a bit more depth, because I think it's phenomenal. And I think when you're in it, you probably won't. You mentioned there glowingly the team that you're working with at the moment, but to build that team remotely, I think is extraordinary. And I think when you're out of this in a year's time, you look back on this and realize just how extraordinary the job that you've done over this period really is, because it's a unique set of challenges and a skill set there which no one's prepared for. And I know you can cite 2008, but again, as you said, very, very different set of challenges. And in some ways, easier because everyone was together. I know it had a much more devastating impact on the sector
Exactly.
than it has this time out, but it's a different set of challenges again. Liam, I think it's phenomenal how you've done that. But I'd love to get just a couple of things that you can say really worked for you over that period.
I was going to say the one thing I would add to what you were describing, which, as you say, we're not unique by any means. A lot of firms have managed by focusing on their their teams and their people more to be successful. But the key, as well as the internal team dynamic, that trust and transparency piece, the other key is listening. And when you're in this kind of environment, as you say, when you're working in an office space together and you're going having a beer after work, a couple of nights a week, 5 nights a week, however often you do that.
I've heard about your roof terrace outside, so I know a little bit more about yours.
We have an amazing roof terrace. Yeah. You as you say, you can kind of pick up on those things where maybe frustration as tensions crept in, but also it mitigates it. People can just smooth the edges off with a drink together after work. When people are remote, you're on team calls all day long, and pretty much almost every time you're on a call, you're speaking to people, it's a functional or transactional. You're there for a purpose. So these tensions or frustrations or little bits of friction can creep in, even in a really great cooperative team. And you have to listen out and be very tuned into the sort of the cues that show it's starting to happen, right? And try and catch it before things flare up or people get too frustrated, or because when you're sitting at home in your own little world, it's very easy for things to sort of seem a lot more significant than they really are. So that's been really key as well. So listening and then tuning in, talking to people individually. There's no hierarchy. There's a sort of management team in Cassini of about 5 people who run different teams, but we all talk all the time and we talk to everyone else all the time. So it's about just making sure that there's that sort of open flow and being sensitive to the signals, other not obvious signals maybe that come from people, to keep that moving.
Those cues are very interesting to work out, aren't they?
The key to the whole thing at the start, which is obviously your world is hiring.
Yeah.
We grew a lot last year, as you said, in terms of staff, but it's a very time-consuming process because we are very, very selective. Because to operate in a team of 40 or 50 people, you need those people who really have all of those attributes, and are able to work in that kind of format and have the smarts and have the communication skills and have the social skills. We're very, very picky about who we hire in the first place.
And so with that hiring and looking at things from last year, let's say, where interview process were probably a little bit more straightforward. You're there and you're looking into people's eyes, which was always the big part of a hiring process, etc. I think there's probably 3 hires that we've made for our clients this year where it's been face to face. The rest of it's all been online. And I've seen companies really struggle to get that right, and I've seen companies who've really thought about their process. And it seems to me that when you talk about people there, you didn't necessarily talk about, just even in that last sentence, you didn't talk about the skills, you spoke about the smarts, you spoke about the attitude, etc., etc. It wasn't like, are they technically skilled enough to do this? Tell me a little bit about how you've sort of looked at and managed the onboarding and the quality of hiring over that period as well. What have you looked for in that process, and how have you tailored your process to make sure you're making the right decisions?
Yeah, it is. It's interesting. I'm not sure whether remote hiring and Zoom interviews is better or worse actually than in person.
Yeah, I know, it's difficult, isn't it?
You see different things about people. So it is interesting, just in terms of approach and professionalism and those kind of things. You'll see people turn up for a Zoom interview, and I've had this literally slouched on the sofa with a 15-year-old t-shirt and a huge Star Wars mug, sipping away for an interview with a firm they know nothing about. So
at best.
Yeah, exactly. So it does tell you different things about people, but it's really just about what you look for in the conversations. I mean, any interview is, we've all had those kind of cases where you're 5 minutes into an interview and you're sort of sitting there going, first impressions, no, and then you talk and expand and drill in a bit more, and then you start to understand the person better, and you see how, where the qualities really are. So it's just about, not being too quick, but to make sure that you spend, which makes the whole process more time consuming, because you have to spend a bit more time on the hiring and actually understanding people. Certainly on the development teams, we're very technically focused. We drill in a lot on technical skills, but also mental agility and an aptitude. But in the sort of client-facing teams and in product and QA, there's a different kind of set of criteria in each case. But the key then is bringing new people in, is onboarding. Yeah. And that is, that is tricky. That takes more time from, the manager of each group with each new person to ensure that there's a lot more kind of Zoom face-to-face time and that people don't feel sort of isolated or lost.
Yeah.
And we always encourage. I've got, there's another sort of saying that we have internally, I summarize as ABQ, always be questioning. Like, encourage people to always ask questions, never to feel that they have to sort of go in, try and solve something on their own, and get lost down a rabbit hole. And you never know enough about anything, even no matter how long you've been doing this. I never know enough about my topic, so always ask another question. Just keep drilling down, making sure you understand things, and come and ask your team lead, your manager, me, whoever it is. Just ensure that you understand something properly for whatever problem you're trying to solve or whatever client challenge you have. So it's much about encouraging that attitude, but providing the support and having people available, and knowing that you can always get someone on Zoom or Teams, whenever you need them.
Yeah, I think that's so fundamental, isn't it? There was a sort of badge of honor I had many years ago, which is it was a client asking, why do you ask so many questions? And I think that sort of ability to do that is fundamental to to the growth and of any business. And I think that you're absolutely right. That onboarding thing is so tantamount to the success of that, particularly in these companies. There's so many companies I've spoken to who've doubled headcount, and when you're doubling headcount, people can get forgotten very, very quickly within an organization and not embedded into the true culture. And we've spoken for years about how important cultures are in businesses, and to have a culture which is as remote as it has been a challenge for businesses, and some people have again got that right and some people got it very wrong. Alongside culture, one of the other big things that people talk about is vision and mission. And I know, Cassini, from everything you've spoken about so far, you're very clear about your reason for being. You're very clear about your vision and the mission for Cassini. Tell us a little bit about that and how that's worked for you and the team.
Yeah, absolutely. I think that is also, as you say, that's key. There's a not uncommon thing with tech firms that they kind of start up, they have a solution looking for a problem, it doesn't work, and then they pivot, and then maybe they pivot again, and they're looking to try and find an application and sort of build some tech and think, how can I find a way to make. I spoke to someone the other day who I won't mention any names, but it's a group that have, I think, built something 5+ years ago, and still being, it's quite a smart piece of tech in its own way, but still trying to find the right application for it. Whereas in our case, as I said, there was a defined vision at the start. There was a defined mission statement, which was to be able to tell a portfolio manager at pre-trade time the full lifetime cost of their trade. And we do a lot more than just that pre-trade piece, but that encapsulated all of the kind of components of tools and analytics and data that we needed to embed in the platform to solve that problem. There's a huge amount you had to build, and then off the back of that, you get all the other kind of components. So we've had a kind of, I hate the cliche, laser-like vision. We've had a very clear sort of focus on that goal that the whole way through. It started off 2014, initially self-funded, and then we brought in VC money later to scale up and go to market. But initially, with a smaller dev team, to explore and prototype and figure out the solution. As we said, I said before, that we had time to do that because we knew that the sort of the market appetite was going to be a little bit down the road. So we took time to frame and scope and design the platform sort of early on and set the framework out. And then we brought the money in, relocated the team to London, opened up in New York, and ramped everything up from there. And over the last couple of years, that's been a kind of continuous growth plan. So the key has been that sort of core solution set has been there from day one. And it's also, as I said, it's a new concept. So the core idea really is that we're overlaying an analytics backbone that goes from front office, middle office, back office, that actually knows and can understand front office data and back office data and risk data, and combine them all in a way that creates value add information and analytics to each part of the trade sort of life cycle. So pre-trade analytics, which was that sort of defining mission statement, intraday collateral and risk monitoring, end of day and sort of post-trade optimization, and end of day attribution reporting, or cash buffer projections, whatever it might be. There's a range of different kind of analytics that come out of that platform that you can plug into wherever your need is in your trade life cycle. So, as I said before, especially in the buy side, they're very often organized in this functionally siloed way, and the technology solutions go with that. So in the front office, you've got your OMS and EMS, then you've got your risk and treasury systems, and in the back office, you've got your collateral and settlement systems, etc. And what we designed was a solution that could integrate into all of those and add value into each of their existing workflow processes with this additional sort of enriched understanding of all of their worlds. And it comes back to that, if you think about it from the business perspective, so there's a kind of system vision, but from the business perspective, the core vision is that post-trade costs, that's margin, collateral, and funding, should be as ingrained a part of your trade control process as market risk is or credit risk is. So you should be thinking about it at pre-trade time. You should be monitoring it in the front office. You should be monitoring it, intraday in terms of limits and alerting, and you should have all your sort of end of day and post-trade reporting in the same way you do for market risk, and also for forecasting and projections, how that will change over time. So that core vision has really been the bedrock, because from that, obviously, we keep expanding the footprint, we expand the asset classes that we cover. We're moving into sort of repo and cleared repo now, which is the last piece of sort of cleared world. And then we have other areas that come off the back of that as well, in terms of sort of liquidity, collateral liquidity management, treasury optimization, wallet share analysis. But it's that core concept of enhancing your trade control process and building this unified view of post-trade into the rest of the processes that drives everything.
And you're in a very interesting world, I think, at the moment in buy-side finance and buy-side tech, because for many years I think it's been quite sleepy in that area. We've seen and probably the biggest trend of 2000 to 2015 was the sort of OMS buy-side wars, where you saw the sort of moving of 3 or 4 major behemoths sort of collide at various different stages with who was having the year of the best sales team at that sort of stage, switching places. And I remember maybe 6-7 years ago, sitting on a panel with a number of buy-side CEOs, and they hosted a dinner that I was invited to, which was looking at maybe 5-6 startup technology innovations in the space, and you had to search pretty far and wide for those at that sort of stage. And I think the last couple of years has really seen an explosion of digital adoption, transformation to an extent within it. And the last year in particular, fueled by COVID, has seen a real adoption of the buy side picking up, from my opinion. What I'd love to hear from you is what you see happening in the vision for buy side finance, buy side technology, and what are some of the trends that we can expect to see coming up?
Yeah, I think we'll start with, I would definitely agree with and support your premise there in terms of how it's changed over time. So when we were running Syncova, so that's 13, 14, 15 years ago now, we really were sort of on our own, especially in that prime broker and hedge fund world. A true small specialist startup was a very sort of unusual beast, and we didn't really have a lot of kind of peers or people we could work with. Now it's a very, very different world. And as you said, what we see, even just within our sort of buy-side capital markets world, there's cloud margins and Ducos, and you can name half a dozen at least. There's a whole bunch of very smart new fintechs, sort of startup or scale-ups with a great concept and a great piece of technology, bringing a new solution to the marketplace. And also not trying to do everything, focusing on solving their piece of the jigsaw, and in a way that's also using modern technology and is open and integratable. And I think that's one of the key things I see changing going forward. So within our world, for example, one of our key strategies from the start has been integration. So if you're bringing sort of value add analytics and optimization to a user, as we are, it's very powerful in its own right, but it's even more powerful if it's available and embedded in their existing tool set. So we partner with OMSs, Charles River, SimCorp, ThinkFolio, etc. We partner with collateral management systems. We recently partnered up with State Street and their outsourcing business.
Yeah.
So we're looking to find the right partners to deliver value-add solutions to their end clients.
Yeah.
And the reason why they partner with us is that awareness across the industry of, let's not try and build everything. Let's work with subject matter experts in each domain and, couple things up and integrate where it makes sense. It's becoming more of a kind of a standard way of looking at the world now, I think. So that's the trend I see going forward, is, less sort of behemoth platform, more, big kind of central frameworks. SimCorp's is the idea of Aladdin's of the world, but, plugging in and integrating with, expert solutions in different parts of the sort of functional universe. Yeah, that makes complete sense. You get best of breed, you get much more agile, innovative solutions in each of those areas. And because, the modern tech stack is all API driven, it decouples dependencies, and it makes firms a lot more able to select the tool set that they need to solve their problems. So I think that's a trend which it's been great to see. It's been great to see genuine innovation happening in our industry. It's an industry that for too long was sort of stale. I'm still on sort of panels and things like that now where we're discussing data issues that we should have solved 20 years ago. So there's still a lot to do. And there are the other great sort of initiatives that we're starting to see come through are things like data standardization, like the common domain model, those kind of things coming through, which will, especially around legal agreements and those more sort of semi-structured data sets, which have always been a problem for people in terms of reconciliation and consistency. So I think
real
those,
growth in that area, hasn't it?
Yeah, I think those two initiatives, they've finally got enough sort of critical mass and traction to start moving properly, and I think those will be big changes that we'll see coming in the next 5 years.
I'm sort of nodding and yesing all the way through this because I couldn't agree with you more. I think that there has been so much talk and this is a consistent theme on this show about collaboration, partnership, and the benefits of. I mean, it just seems crazy that it's taken so long to move away from enterprise tech that has basically dictated how you're able to to use it as an end user. And actually, I love the way concentrate on your piece of the jigsaw and provide real value in those sort of areas. There's so many different areas that out there, and putting a stack in there that can increase efficiency all the way through the process, I think has been absolutely driven, and that's been in no small part caused by what's happened over the last year and the adoption, the rapid adoption of cloud and the final thawing of the last resistance to that particular area.
That I can also
that innovation.
Sorry that I can certainly vouch for as well. So when we started bringing Cassini to market 3 years ago, I say, we took the view that we would not be a pure cloud solution. We would offer the flexibility. So we have clients who deploy on premises. We have partner firms that actually fully embed and integrate their own version of Cassini. But we also offer it and host it in the cloud for clients. And we now have a sort of a lighter weight reporting only SaaS solution. So we've got a range of different deployment models. And you've seen it even in the last 2 years. The change in the larger sort of more conservative traditional firms that previously would have demanded on-prem or at least their own single tenant instance are now becoming a lot more open to on-prem is not really in any of our discussions anymore. That's now it's all about, okay, well, you host it in the cloud for us, and we're now starting to get more uptake on, okay, well, actually we'll happily use a sort of a centralized service as well. So to your point, exactly, there's definitely that sort of shift in acceptance of the cloud and of cost efficient, time efficient sort of deployment solutions.
Efficiency, absolutely the kernel of everything we're saying. Liam, this is a conversation I feel like I could be having for the next 3 hours and not even get close to finishing up. So we're definitely going to revisit this because the Cassini story is fascinating, but so too is everything you're talking about in between it as well. Let's finish by talking Cassini and talking about 2021 and beyond. So you've spoken a lot about the journey, the reason where you're going, the sort of problems you're able to solve at the moment. Give us a bit of a snapshot as to what's exciting, what people can expect from Cassini over the course of 2021, and tell everyone who should be talking to you right now.
Yeah, so 2021, firstly, the great thing is hopefully we're all going to actually be able to meet up again and go meet our clients in person. I mean, we talked about onboarding staff, etc. earlier. We've signed up a whole raft of clients last year that we haven't ever met. I mean, that's completely alien to me. My entire career, you're doing business and very closely partnered with people that you've never even met in person. So it's going to be great to go meet those people, actually, be able to do sales process where you get in front of people and you actually get to know them and build a relationship. So that's going to be a great thing going forward. From Cassini itself, as I said, we have sort of 2 or 3 big things we're doing this year. Firstly, we're releasing a new UI. So we've basically, it's one of the great things about being a agile company. You can learn and adapt and shift quickly. So we have a user interface for the platform that we built, started building 3 or 4 years ago. And as you get clients using it, as you get more and more feedback, you can take that on board. So we've basically redesigned the user journey from the bottom up and built a whole brand new user experience. So we're rolling that out, which is going to be great. And we're looking forward to, clients are all demanding it tomorrow. There's a lot of excitement about that. We are also sort of bringing out some slightly more sort of focused solutions for different parts of our market. So one of the things about what we do is we focus on, we address the entire buy side, but that's a very big universe. We have $1 trillion asset managers, we have $1 billion hedge funds as clients, sovereign wealth funds, and everything in between. So there are different sort of solutions or different packages that firms in the small to medium end of that market want in terms of more canned, standardized reporting and analytics. So we're rolling some new packages out for those firms. So specifically targeted at the hedge fund market and what is also in the parlance known as the phase 6 firms. So those are asset managers that are in phase 6 of the UMR regulations. So they have all of this new regulatory compliance obligation, but their requirements are lighter weight, monitoring oriented. So we have some packages coming through for those guys. As I said, we're also adding repo clearing into our universe. And that's all really first half. That's in the next 3 or 4 months. In the second half of the year, we then have some of our more strategic product expansion that we're bringing through. So more stress testing, tools around collateral liquidity management, and also what we call sort of treasury optimization. And that's really, that's a very powerful longer term goal of ours, where treasury optimization to us is looking at your overall inventory holistically, not just managing the cost and the obligation side of it, which is margin and collateral, but looking at the revenue generation side of it. So where can I repo, where can I use sec lending, short term, and a holistic optimization solution around that. So that's a piece we're starting to push a lot more on in the second half. And we also will be bringing through some additional wallet share and reporting tools for hedge funds. So there's quite a lot of different extensions that we have on plan, a very busy roadmap for the year. And also, as I said, continuing to expand. We're expanding our Asia presence. We're expanding our team in New York, building that up a lot more. Once COVID restrictions are now out of the way, we can really drive that forward. So a lot to do.
Quite, yeah. It's if 2020 was an exciting one for you, 2021 sounds even better. So Liam, it's been an absolute pleasure. I've been sat here with a sort of smile across my face for almost all of what you're saying, because it's an area that I absolutely love. I've always loved that sort of buy-side tech space, and I've got a long track record in that sort of area of seeing companies grow at pace. And I know when you get it right, it can absolutely change the world a little bit within that. And your story is fantastic. It's been great to hear it. It's flown literally through this whole conversation. So as I say, I could be having it for a lot longer. So I really appreciate you coming on board, being so honest with everything you've been through so far this year, to introduce the company. It's been great talking to you, and thanks for coming on the show. Really appreciate it.
Yeah, likewise. Thanks, Toby. It's been a fun chat, and as you say, it's when you're talking about things you're really invested in, enjoy doing it. Time goes, so could happily carry on for another hour. But thanks for your time. Thanks for inviting us.
No problem at all. Thank you all for watching, everyone. Thanks for coming for tuning in, and we'll see you soon on another episode of Fintech Focus TV. Thanks a lot. Cheers.